Good afternoon, ladies and gentlemen, and welcome to the Minds and Machine Group PLC virtual AGM. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be made available via your Investor Meet Company dashboard. Finally, I'd like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll. I'd now like to hand over to Toby Hall, CEO, Michael Salazar, CFO, and Guy Elliott, Chairman of Minds and Machine. Good afternoon, gentlemen.
Good afternoon.
Good afternoon.
Thank you, Mark, for the introduction. I think on the line from MMX, as Mark said, we have Guy Elliott, who is co-founder and chairman, non-executive chairman of the group, Michael Salazar, who is executive director and CFO, and myself as CEO. I'm going to hand over to Guy. We're going to start with the formal AGM, and I'm going to hand over to Guy to run that. And then we will move to a presentation, a brief overview presentation, because I'm aware there may be listeners to this call who are unable to, who may be new to the story, and then there will be a Q&A session. So with no further ado, Guy, can I hand over to you to call the AGM to order and run that, please?
Thank you, Toby. Ladies and gentlemen, good afternoon. It is now 2 p.m. British Standard Time, and I declare the annual general meeting of Minds and Machine Group Limited open. My name is Guy Elliott. I'm chairman of the company, and I would like to welcome you to the annual general meeting of the company. As you know, today's meeting was called by a notice of annual general meeting dated the 30th of July 2020. That notice contained details of various resolutions, and today's meeting has been called for the purpose of considering and, if thought fit, passing those resolutions. Although current restrictions prevent us from holding a physical AGM, we're delighted to be able to offer an opportunity for investors to engage with MMX virtually. Unless there are any comments or questions to the board concerning the matters referred to in the notice, including any of the proposed resolutions, then I propose we take the notice as read by the company's members and proceed to the business of the meeting. In my capacity as chairman of MMX, I direct that all resolutions to be put to the meeting be taken on a poll to ensure that the proxy votes of all our members not in attendance today are counted on the resolutions. The terms of the resolutions are set out in full in the notice, and I will put these to the meeting one after another. The result of the poll vote on each resolution will be announced before the conclusion of the annual general meeting and published on the company's website as soon as reasonably practicable. Resolution 1. Thank you. I would now like to propose the passing of the first resolution, which is proposed as an ordinary resolution, that the financial report in respect of the company and its entities for the period ended the 31st of December 2019, together with the director's report in relation to that financial period and the auditor's report in respect of the financial report, be approved. Resolution 2. I now propose the passing of Resolution 2, which is being proposed as an ordinary resolution, that Mazars LLP be reappointed as auditors to hold office until the conclusion of the next general meeting at which financial statements are laid before the company. Resolution 3. I now propose the passing of Resolution 3, which is an ordinary resolution, that Toby Hall be reappointed as a director. Resolution 4. I now propose the passing of Resolution 4, which is an ordinary resolution, that Michael Salazar be reappointed as a director. Resolution 5. I now propose the passing of Resolution 5, which is an ordinary resolution, that Guy Elliott be reappointed as a director. Resolution 6. I now propose the passing of Resolution 6, which is an ordinary resolution, that Henry Turcotte be reappointed as a director. Resolution 7. I now propose the passing of Resolution 7, which is being proposed as an ordinary resolution, that Brian Disher be reappointed as a director. Ladies and gentlemen, that concludes the formal business of this annual general meeting. We will now proceed to a presentation from the CEO, Toby Hall, and Michael Salazar, followed by a Q&A. Toby, over to you.
Thank you, Guy. I would just thank you for that. I think it would be helpful, Guy, if you have a moment just to read out the proxy results before we move on to the presentation.
Oh, okay, sure. Resolution 1, for 236,607,524 votes in favour, 0 against. Resolution 2, 3, 4, 5, 6, and 7 equally had 236,607,524 votes in favour, 0 against.
Many thanks. So I think that brings the formal part of the meeting to an end. And Michael and I, so thank you for that. I will just come on camera just for 1 moment to introduce myself. Again, Toby Hall as the CEO, and Michael will run through the presentation. Just because of bandwidth issues, I will go off the bandwidth. Just going off. So by way of background, Michael and I took over running the business just over 4 years ago now. And when we did it, Michael, as I think I mentioned, was previously with the regulator, ICANN, that regulates our industry sector. And when we took over the business, it was essentially an excellent asset-based business, but running at significant loss. And our goal along the way was very simply to turn around the company from a loss-making asset-based business reliant on one-off income to generating profit and positive cash flow from automated online channel sales, i.e. swapping out low-quality revenue with high-quality revenue. So growth in year 5 would be from quality-based revenue streams. In short, to be, as we set out in our goal, to be delivering a predictable annuity stream of a SaaS-type revenue model. And I'm pleased to say we are ahead of schedule on delivering on that. So hopefully that gives us a sense of the business we're in. To give an understanding of our assets, the assets that we have, which we view as infrastructure assets, we have 32 top-level domains. And what we mean by a top-level domain is think of .com or .org. We have 32 of those extensions and running from .law and .vip through to specialist interest such as .yoga. And so that gives a sense of our properties, and we characterize them by those in blue, which are generic in nature. So think of .work, or being of a vertical interest, such as .fashion. We then have those that are geographic, which within that we include the likes of .london, .bayen, .nrw. And then we have those that are licensed for operation within China, and they're the ones that are marked in red. So a broad portfolio and some excellent names and properties within that. Turning to the next slide, how our business model and how we make our model. So in essence, we have 32 assets, 32 top-level domains, which are outlined on the earlier slide. And to plug those properties, those IP properties, into the internet, we have a technical platform that we outsource, and that's run primarily through Nominet, that runs .uk. And the advantage here is highly scalable and low cost. We then sell to our consumers via a third-party independent network of registrars, and registrars are the online retail panel. So again, that is outsourced and allows us to have significant reach at low cost. And then our revenue model is really a SaaS-type annual recurring fee from end users via registrars. So when a consumer buys their .work address, They buy it, pay a first-year fee, and then each 12 months, it automatically renews, and we receive the fee as it renews each year. And typically, as I think we all understand with names, they're used traditionally on the web for email, websites, and marketing, and they indeed can be held for investment. So those are very much the uses. Just to put the business into context, when Michael and I took over the running of the business, the previous executive team were attempting to do all three. They wanted to own the asset, operate its own technical backend, and be its own retail channel. And we have really used the advantages of outsourcing to create far greater operational efficiencies within the business. And to give you an example of one of those efficiencies, if we look at the sales reach that we now have by outsourcing, we have over 250 retail partners across the globe, which allows us from a small team, no more than 20 in the team, to be able to reach and service a global market. And this slide was done at the time of our full year results. And it gives you a sense of the number of registrars we have in each region now. And the plus numbers are those that we've increased over the previous 6 months. And this slide will be updated as and when we formally present our interims. So that hopefully gives a sense of the assets we own, our business model, and how we sell to the end market. As for driving the business forward, our growth strategy has 3 legs to it: organic growth, innovation, and selective acquisition. And what we mean by organic growth is that traditional growing the core portfolio through the retail channel. So better developing the natural sales from the existing marketplace in each of our core 3 regions. The innovation piece is really about how do we create value-added new services for end users that enhance the value of our underlying assets. And we can talk about that later. And selective acquisition is really how do we accelerate the organic growth and innovation within the portfolio by selective purchases of new properties. So that is really by way of a quick overview of the business. And I'm now going to hand over to Michael to take us through how we are doing against that in that journey of delivering growth. And there is one thing before Michael, I hand over to Michael, is just to stress we are in a closed period at the moment, so we are limited on the amount of information we can present. But with no further ado, Michael, please can I hand over to you?
Thank you, Toby. So on this slide here, on slide 11, what we're looking at is effectively the numbers coming out of the trading update, which you can see in previous presentations that are on our website. But importantly here, overall registrations are up 31% from 1.8 million at the end of H1 of 2019 to 2.38 million. Why that's important is because ultimately that registrations convert to renewal billings. And so we strive to continue to grow the registration numbers so that we can continue to grow our renewal billings overall. Total billings for the year, for the half year, up 7% from up to 7.9 from 7.4 before. And what's important there is that is made up of channel billings, which are up overall 20%. As Toby had indicated, that is the organic growth story. Channel billings are automated billings through the system. And that's further broken down by new registration billings, which are up 23% to 2.6 million, and renewal billings, which are up to 5.2 million from 4.5 million. Ultimately, what does that convert to? It converts to cash generation increasing by 13% for the half year. Just to be clear on what billings are what we invoice to our retail channel. Revenue, slightly different. Revenue is the waterfalling of those billings over the registration life. We do have deferred revenue, and so that I just wanted to make sure that there was a clear distinction between what billings were and what revenues are. You'll see on the next slide, we have talked about this. We talked about this, our improved revenue streams in 2016 as a goal. We knew in 2016 that the way that we were going to turn around the business was to start pushing out high-valued premium domain names. So think of a domain name that might sell for several $1,000s in the first year. A large part of our business was brokered in premium names beginning in 2016, and we had a 5-year plan to grow that, to lessen our reliance on that and grow the standard and renewal billings over time. As of 2019, if you look in 2016, 60% of our revenue was from brokered and channel premiums. Going through the end of 2019, that's now down to 18%. And more importantly, 91% of our total billings are coming through the channel. So we have less reliance on brokered sales, which are now less than 10% from a revenue perspective. Also, we've worked hard to improve the geographic mix. If you look in 2017, a large part of our revenue was coming from Asia. Over half of our revenue was coming from Asia, and a little bit less dependence on the US and Europe. If you look at 2019, almost 80% of our revenue now is coming out of the US and Europe, and much less reliance on Asia at 21%. So we think we have a very balanced geographic mix of revenue, and we continue to work on that growth.
Yeah, and for the audience, just to make it clear, this slide is from the numbers from our full year 2019. And as you can see there, we were indicating 91% of our revenues were from the automated channel. As you saw in our trading update, that's now up to 99%. So really at the heart of this final stage of replacing one-off income with automated income, and is a very important crossover point for the business.
Yeah, that's exactly right. So in terms of registration numbers, when Toby and I took over the business, the running of the business, the number of registrations were just below 300,000. At the end of 2019, they were up to 2.46 million. So a significant growth over that time. And we continue to grow again, those registration numbers. As I said, that's what feeds into the renewal revenue. You can see our overall revenue has grown from 6.3 million at the end of 2015 to 18.9 million at the end of 19. Importantly, in those interim years were a lot of brokered one-off revenue numbers, which are now converting much more into channel revenue. You can see in 2015, outside of auctions, private auctions, the company had been running at a $13.3 million loss from an operating EBITDA perspective. That is now 6.4 million, so quite a big turnaround over the past 5 years. And so we expect that obviously to continue growing. And I think with that, Toby, I will hand it back to you.
Thank you. Just one observation, and again, we did point it out in the trading update. This year, as we swap out the final place of lower quality revenue, the reason, Michael, we pointed out that difference between billings and accounting revenue is that simply a brokered sale, 100% of the sale is reflected at the point of sale, and with channel sales, they get waterfalled over the life of the registration. So if it's a year, equally 12 months. If it's 5 years, 5-year period, the sale amount. So we have indicated that, that in spite of all the key metrics going right in the right level, from an accounting perspective, we're likely to see a dip in top line revenue, and guidance has been given. We're very open about that, and it's a recognised part of this final leg of the turning around of the business. The next piece outside of organic growth is innovation. And this, as mentioned before, is about creating relevant value-added services that enhance the value of our assets. And really, to put that into context, when the World Wide Web was conceived over 30 years ago, and giving a name and associating it to an IP address, it was all about creating a world of ease of use, of security, user identity, and IP protection. Embedded into a name for an IP address were these qualities. And really, the success of the World Wide Web and the internet to date has been about its ability to deliver, to provide ease of use, to be secure. And I've got white hair, and I remember the energy that we in the internet industry had to do to convince people in the late 1990s and early 2000s that it was safer to enter your credit card details into online than handing it your card over at the bar or at a restaurant on a Friday. And that has been proven out. The reality is, though, the internet usage has exploded over that period, and the traditional DNS is really under pressure. And this is how we are now seeing the emergence of new protocols. A lot is talked about blockchain, for example, and really they're helping address some of these areas of tomorrow's usage. So what we have done in this slide is really to give an insight into the underlying thinking about some of the projects that we've been developing behind the scenes in so as to better monetize our portfolio today, and also be a part of the future evolution of naming conventions. And the first piece of work that we did, which is really an R&D project, we've always positioned it as such, is this understanding of how a name that can work on the World Wide Web, on the DNS, can also work within blockchain universes. So within the Ethereum universe, within the Bitcoin universe, because today there are no crossover naming conventions, and certainly there weren't 2 years ago. And we've been delighted to be part of that journey of testing how to bring the infrastructure and the governance that exists into the DNS, and start bringing the best of that into these emerging areas of blockchain usage where issues of governance haven't been properly established yet. And we continue to make good progress with that project. And we use .lux as the extension for that work, and happy to take questions on the progress of that project if they come in. Then the second piece of innovation work that we focused on in 2019 was around brand protection. And to put that into perspective, the context here is 10 years ago, there was essentially only one script that was recognized on the DNS, and the Roman script. So if a company wanted to protect itself, it would simply buy its own name in the country codes and .com that it felt were relevant. The challenge is that as ICANN, the governing body, has wanted to further democratize the DNS, it has naturally allowed many more scripts in Mandarin, Cyrillic, Arabic scripts, and many European variations of the Roman script, and others. And as a result of that, it is now possible for a fraudulent player to create lookalike words to a company name that to the human reading eye looks as if it's coming from well-known bank or well-known brand, but is anything but, and is actually spoofing people to provide their bank details or any other third-party details to do potentially man-in-the-middle attacks and many other variations and scams with that data. So we've worked with a partner really to provide a modern version of brand protection for today and the future, rather than a one that looks back. And what we have done is, with our partners, help create that algorithm that allows not just the original word-for-word match to be registered, but we will block all the variations and lookalike numbers. And to put that into context, that could run up to 5,000, 6,000 for a company name. So many, many variations. And by creating a package and blocking the name, doesn't, at the registry level, doesn't mean that we have to register those on the DNS 5,000, 6 times. As a registry, we can block them at the registry level, and no other individual can ever register. And we focused that first aspect of the product around our adult properties, because we know brands clearly want to make sure that their branding rights are well protected. And Adult Block was launched at the back end of 2019 and was well received in the market, and we continue to roll out that product. And again, happy to take questions on that should they arise. Outside of the business, clearly the goal of how we're running the business with our board is to generate returns for our investors. And we were, as I think existing shareholders will well know, we were on track to introduce a maiden annual progressive dividend this March, but due to COVID, we took the view to delay any decision on that until September. Outside of that, we are cash generative and have been putting cash to good effect because we see value in our business model, and where we see that the market isn't, we will buy back our shares. And in 2019, we bought just under 6 million shares back at an average price per share of 5.99p. And this year to date, we've bought nearly 17 million shares back at 6p. And so in the last 18 months, we have reduced the issued share capital by just under 2.5%. And we see that is we see value in that activity continuing. That said, we do have scope to supplement shareholder returns under the dividend program, progressive dividend program, or with either special dividends or tender offers as the circumstances dictate in future periods. Throughout every stage, our goal is to maintain that healthy cash balance and robust balance sheet. And that has put it in very good stead, in it, particularly when the unexpected happens, such as COVID-19 this year. We've seen the business able to continue and grow without the need to furlough staff or to take advantage or need of any government handouts in whatever jurisdiction we might be operating in. And we believe that really is a testimony to the robustness of the business model we now have, with the absolute majority of our income being automated through the online channel. Because I have no qualms, COVID has impacted the sector, but it's impacted those areas which have been reliant on groups where physical interaction, one-on-one meetings would typically be doing the majority of the work. So naturally, areas such as manually brokered, negotiated trades, heavily reliant on in certain regions of people discussing, that activity has clearly slowed, and to a certain extent, innovation, new activity. But we're pleased we have come through COVID, or certainly the first wave of COVID, in good shape. And should there be a second wave, we believe we are well positioned to weather that as well. So thank you for. I hope this has provided a quick overview to the company, and we look forward to be able to provide a much fuller update and presentation at the time of our interim results, which will be next month.
That's brilliant. Thank you very much, Toby. Thank you, Michael, and thank you to Guy. Ladies and gentlemen, could you please continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company take a few moments to review the investor questions submitted today and prepare for the pre-submitted questions, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard. Before we actually hand back to the team as well, I'd like to remind you that your feedback is incredibly important to the company. And immediately following this presentation, you'll be provided with the opportunity to provide feedback in order that the company can better understand your views and expectations. Toby, Guy, Michael, obviously investors had the ability and shareholders had the ability to pre-submit questions, of which I think you have a number. Perhaps, Guy, if I could hand over to you to work through those, and then I'll take it back, and then we can enter into the questions that are coming through as we speak. If that's okay, Guy,
sure.
I'll hand over to you, sir. Thank you.
Okay, first question. Let me read the questions out and then hand it over. The recently referred to 5-year plan ends in 2021. Is there any particular relevance for the conclusion of this timeline, i.e., what is planned to happen over the next 12 months, given the plan was created in 2016, that will allow the plan to come to fruition? Toby, you want to take that one?
Thank you, Guy. As I said in the presentation, the plan was to complete the turnaround of the company from a loss-making business that was reliant on one-off income to generating profit and positive cash flow from automated online channel sales. So to repeat what I said earlier, swapping out low-quality revenue, one-off revenue that we had to get that $30 million loss into profit with high-quality revenue. So growth in year 5 would be from that quality-based revenue streams. And yes, when we put that plan together in 2016, we, frankly, envisaged little top-line growth in the business over that period. Such was the leap in top-line revenue from one year to another. But obviously, we're very pleased that we have, through acquisition, been able to accelerate and move into top-line growth as well through the acquisition piece. So that has brought forward the plan. So the 5-year plan was around transitioning the core business from loss into sustainable and growing profit, and we're on track, and then supplementing that as we can through innovation and obviously acquisition.
Okay, thank you, Toby. Next question. The addition of a daily DUMS total on MMX website is useful. What would be more beneficial is a breakdown by string. Could this be provided? Michael, over to you.
Thanks, Scott. Sorry, I was on mute there. Yeah, as a portfolio, because we have a number of these, we will always report on an aggregated basis. But that said, there is information on each of the individual TLDs across the industry, and in fact, the best site to go to would be ntldstats.com. The site provides a fairly reasonable estimate of DUMS by TLD, across the entire industry, and you can actually break that down by different portfolios, different registries, different registrars, and it gives you a very good cut of the data. And it's also a site that we look at quite frequently just to see how it compares to our numbers, but they're pretty close.
Thank you. Number 3, what is happening with .dds and .budapest? Toby, back to you.
Okay, back to myself. Right, these are interesting properties, but both TLDs, they both have a number of restrictions that were imposed by either the regulator or our business partners in them. And we are now really working through the removal of those restrictions on both. So with the goal of being ultimately able to monetize them.
Okay. Number 4, we have a number of underperforming strings in terms of registration numbers. At what point do strings break even? And are there any moves to withdraw poorly performing strings? Michael.
Thanks, Guy. It's a very good question, actually. There is a benefit to having a portfolio, and the benefit is that we were able to apply different approaches to different assets to generate revenue. We also have a very solid platform, and we're able to leverage that platform to run a number of TLDs without any additional associated costs. Break even is not high when you're looking at 30 plus TLDs, especially with the portfolio that we have in the infrastructure that we have in place. I also, keep in mind that different strings run have different wholesale rates given the nature of the string. So something that might focus on a vertical industry, such as .fashion or .law, might have a higher price than something that is a little bit more generic, such as .vip or .work. At this point, there are no moves to withdraw any TLDs. We continue to work on improving all aspects of the portfolio.
Thank you, Michael. Question number 5. How are our adult domains performing given the previously referred to decline, then improvement in sales? How many .xxx registrations do we have? Statistic websites have the number as low as 91,000 and as high as 100,000. Toby, you're an expert in the field of adult top-level domains, so over to you.
Thank you, Guy. You don't miss an opportunity. They're performing in line with management's expectations. When we acquired the portfolio, we saw it. I think it's important to understand that adult content is a part of the World Wide Web. It's out of Pandora's box, and putting it back in is frankly an impossibility. And what the regulator saw through permitting these TLDs was to create a much safer environment so that younger users of the internet can clearly be zoned off. Because the problem with generic extensions, and I'm not going to name any, or country codes, is that people can find themselves through no fault of their own in absolutely the wrong areas. And by creating ring-fenced areas, that limits that. And more importantly, it allows us to put in security measures and additional measures to make sure that that they are used in the right way. So we were interested in those properties because of the makeup of the numbers, very, very secure numbers, but they were a mature property. XXX had launched way before the new GTLD program, and were in decline. And we saw through the outsourced registrar model that we developed for our whole portfolio, there were natural synergies that we could really better market and widen the audience of those properties through a wider registrar network was the first piece. The second thing that was of real interest to us was that when XXX was launched, it had a very successful, it was really the originator of blocking. They saw the opportunity that many brands and emerging companies would absolutely not want squatters to be buying their properties in those and effectively holding them to ransom. So the founders of XXX took a very wise move to allow brands to come in pre-launch before the property went on sale to the general public to be able to block their names through a 10-year block. And what a block means is that a name does not get registered at the DNS, which is the traditional way of a brand protecting itself. The registry that operates the phone book, as it were, of names, we simply block them at our level so that, again, they can never, no third party can come in and try and register them. Those 65,000 names that were blocked to that point were for a 10-year block, and that block comes up for renewal in 2021. And what we saw was this big opportunity, which wasn't frankly priced into the sale price by the seller, to really create a modern day product that captured created a relevant product. And we wanted to introduce it way ahead of the natural renewal point, so the market could understand what it is we were doing. And we were delighted with the uptake in that very early stage, early sort of launch phase at the end of last year. And we look forward to continuing to roll out that product in version 1 of that product over the next 18 months as we capture the 10-year renewal point. To the heart of the question, the adult properties are performing absolutely in line in management's expectations, i.e. we're seeing growth within the core DNS-based registrations, and we are particularly pleased with the initial progress that we saw at the end of last year, and we expect further progress through the adult.block piece. So as for the registration numbers that the users that the question refers to, yep, they're broadly in line with the numbers we're seeing our side.
Thank you very much, Toby. A quick one here for you again. What are the sales team involved in historic broker deals now doing?
There's a lot of questions. We're going to have to run through these because I'm aware of the time, and we're only up to questions. About 14 of these questions. On the sales team, historic broker deals, the personnel that were historically involved in broker deals, they've been replaced with personnel focused on growing the channel. That's been our approach since we took over the business, and it remains the approach. As part of that 5-year plan, it remains the same, and we continue to review the needs of the business moving forward. So there is constant change.
Okay, thank you. I'll take the next one. Number 7. Why have FinCap been unable to provide any guidance for the current financial year despite a full 8 months of trading and an interim half-year update? Answer. This is primarily because of the unknown impact of COVID, in particular around the anticipated new revenues from adult block, which is highly dependent on the timing of when certain registrar partners activate their marketing. We expect they will provide guidance post the delivery of our interim finances, our interim financials. Number 8, have any of the write-downs in relation to aged debtors been recovered? Michael, over to you.
Thanks, Guy. Yeah, look, a quick one here. We continue to work on recovering against the write-downs. I think we've stated that previously, and so we're still in contact, obviously, with those debtors and work through that. We have recovered most of the property that was sold to them because they are domain names. We can claw some of those names back. And we are collecting renewals for those that we have not recovered. So there is renewal revenue coming in on those assets.
Thank you. Number 9, does the company have any targets for the volume of registrations and anticipated revenue for adult blocks? Toby, over to you.
Yes, we do. And as I previously indicated, and I think, Guy, you mentioned, that really is dependent on our registrar partners activating their marketing to their base. This is a unique opportunity of 65,000. Those underlying registrations, the registrars who manage each of those client base, we are dependent on their marketing. In Q2 this year, those plans from certain partners were impacted by COVID, but we're pleased that people are coming through the storm and are reactivating. So as we gain further insight, then we can start sharing those numbers via guidance, via market forecasts.
Okay, thank you, Toby. Number 10, is there any breakdown on the average revenue per domain available? Michael, back to you.
Yeah, thanks, Guy. We don't. That's not a number that we provide, given that the number of domains can vary widely. But perhaps the simplest method to do is to take a look at our year-end financials for 2019, and you can take a look at the revenue. We did 18.9 million in revenue. And you divide that by the number of domains under management at that time, which was 2.46 million. So that'll give you an average of just under $7.70 per domain, as a quick calculation.
Thank you, Michael. Number 11, has the company had any recent conversations with the 3 parties who proceeded to detailed sale discussions as part of the strategic review? Toby?
That obviously the strategic review was something that was initiated in 2017 and ran through to 2018, and we were looking at we'd been approached, and obviously we were looking at buying, and obviously we chose to go down the buying route at that route. Look, it's a small industry, and we are always discussing business opportunities with various partners. We can't comment on the nature of those discussions, and I'm sure nobody would expect us to.
Thank you, Toby. Number 12, would I be correct to assume partner payments as referred to in our accounts relate to registrar commissions on domain sales? If not, what are they? Michael.
Yeah, thanks, Guy. No, partner payments are not registrar commissions. We do, there are some commissions that are paid to brokers and registrars, and that would be reflected in cost of sales. Partner payments relate to a limited number of top-level domains where there is a revenue share agreement in place with our commercial partners. Those partners were critical in securing the TLDs, and you would probably see that more in the geographic TLDs where we work with the government.
Okay, thank you, Michael. Number 13, I will take this. I assume the dividend question will be addressed at the time of the unaudited accounts released in September 2020. Correct. The board will give further guidance with the release of the interims. Question 14. Thanks a lot for the presentation. I would have a question regarding the R&D program on the blockchain with .lux. I would like to know where MMX stands there as of today. Toby, that one's for you.
Okay, it's the last question for those listening, so we will get round to some of the questions that have come in. So as when we launched .lux, we focused on just simply integrating with the Ethereum network. Ethereum has the largest ecosystem, or did it in 2018, of developers are using it, and is the sort of second largest value in token. But it is it's 5 times smaller than Bitcoin. So it may be second, but it's in value. But for developers, it's a building tool. So we thought to integrate, create a name that worked for .lux on the DNS and blockchain was important. The reality is, though, each blockchain is able to communicate and talk to members within its own universe. So Ethereum addresses can only work with other Ethereum account holders, and vice versa with all the other chains. And what we wanted to see, if it was possible, to create the ability to have a single naming convention that could work across multiple blockchains. And we first ran that outside. We developed the concept outside of that on a Bitcoin fork, and we proved that technically that was a very possible and something that was able to be developed. But for that to have use and real value in public blockchain universe, i.e., so that an address could work between wallets on Ethereum with EOS, etc., we wanted to be able to create that ability within a large ecosystem of existing, where wallets are already hooked in. And so that same multi-chain engine approach, we are now integrating with the Ethereum ecosystem. So locks cannot just be associated with the Ethereum wallet, but also with the other main token wallets that are within the Ethereum ecosystem. So that has given us significant insights, and that where we're in the final stage is that integration, and would expect it to be going to public availability in the Asian market in late Q3, early Q4.
Thank you very much, Toby. Obviously, that's quite an extensive number of questions that you've taken on there. And I'm also equally mindful of time, but you've got as much time as you require. Obviously, investors have had the opportunity to pre-submit questions. And just to remind investors that should your question not get answered during the live event, the company will review all questions submitted today, and where appropriate, to be able to produce published responses, and we will obviously notify you when they're available. So perhaps, Toby, I could hand over. Obviously, on the Q&A tab, you'll see a whole string of questions have come in. Perhaps if I could just ask you to read out the question, because of course investors can't see other investors' questions, and perhaps then where it's appropriate to give your response. Over to you, sir.
Yes. Is it possible just to have a minute?
Yeah, absolutely. Feel free.
I might just go off.
No problem at all. But obviously, to prove it's live, I'll just absolutely not start singing or putting on any kind of entertainment in the meantime. So for investors, just please bear with the company just while they review those questions today. Just for the moment, I'll place all presenters onto mute as well, with the exception of Toby, until you tell me otherwise.
Yes, let me. I'm going to take a couple of. There's been about 6 or so questions in, so many thanks for those questions that come in. Those that we don't have time to speak to today, we will provide written answers to. Because the whole purpose for us for joining this platform is we see a real need to find new and innovative ways of communicating with the private shareholder base, and we're very impressed by the team Mark and his team have been doing. I won't say who's asked the question, or maybe I do. Jake D, great presentation and amazing to see you host the AGM despite the obvious barriers. Are there any new territories you would look to expand into? I mean, that's an interesting question. We are focused on Asia, which is a broad. We view that as a broad region. Europe and North America primarily. India is an area where to date we have had little progress. There are certain regions of the world which I'm sure we all can see that would be bolt-ons, and we do look at that. We do keep an eye. Michael alluded to sort of, at a very general point, some of the data points that we look to. So yes, we do keep tabs. And when I spoke earlier about us constantly reviewing our force, our team, we have an outsourced model, and really the goal should be to be continuing to reduce our OPEX where possible, manage our OPEX, and used other mechanisms to be able to test new and emerging areas. We have a broad portfolio, and they cover many subjects and potentially territories as well. So that does demand us to look at how we're set up according to the plan for the 12, 18 months. So that is.
Sorry. No, I was going to, there's another question here that perhaps I can provide an answer on, and this is from, if you're done, I'm happy to take this additional question.
Sure.
Okay, this is from David S. Can you share your view on the new GTLD round being planned by ICANN? Does Minds and Machines plan to participate? So this one's sort of near and dear to my heart since I was at ICANN when we were getting ready to roll out this program. As a company, as MMX, we welcome a new round, but that subject to any remaining process issues being addressed by ICANN, of which there are a few. And there was a lot of pressure, I believe, on ICANN to get the program rolled out. And we've seen a number of process issues since it's been rolled out that, things take time with ICANN, and there's a number of things we want to make sure get addressed before we go into another round. That said, once that round opens up, we will evaluate our approach, but we need just further clarity on what that next round is going to look like.
Yeah, exactly. Neville S. I'm not just reading out the ones where people have provided been polite. That is just by accident. Thank you for running this online. Have you seen any changes in the pattern or type of domain registrations in the past few months? The answer is yes, we have. And I think what is interesting is, in the early days where we've been successful with properties, and this is no difference for .com, is in the early stages, you'll get investors, early movers who will buy large chunks of property on the belief that they can monetize them either through monetization programs or reselling, a combination of the two. And what we've seen is in the last few months is a change, a tailoring down of that, but a real surge in names which are clearly being bought by real businesses. And I think I was talking to a country code person there, and they were saying, well, I have a premise. And it was a sort of a fairly, sort of harsh reality premise. And I said, well, how have your registrations have gone? They said, well, they've gone through the roof. And I said, well, the reality is in the West, we always believe that the market's mature. And I think what this what the code has shown is there have been many smaller businesses that have been historically relying on word of mouth, and they have really had to transition their business model and recognize the online channel where perhaps they might not have needed to. So we've seen a healthy amount of real usage. And what's interesting is these aren't what I would describe as they've got the characteristics of seeing how they're then using and some of the services they're adding in. These are actually they're jumping in and look to be what I would describe as again solid businesses that have reacted and are now wanting to project further growth. So we have seen some change in that. Michael, is there any other ones? I'm just aware we're coming up to the hour. Any final?
There's a few in here. I think they're probably take a little bit, perhaps longer to answer. One, I'll just get one question that was asked is, what's your visibility of revenue and what is your churn? Let me give you sort of the short answer here. We do have good visibility on channel revenue, which is new registrations and renewals. Although we have been fairly cautious on that because, no one really knew what the impact of COVID was going to be. Fortunately, as you've seen from our numbers, billings have gone up, channel sales have gone up. So there's been a positive impact. New products, such as Adult Block, are a little bit more difficult to model. One, because they're new, and two, because we just, we're unclear of what the impact is of COVID. And as Toby has alluded to earlier, the retail channel, which we rely on, slowed down their activation of this product. That said, we see them moving now to activate that and to reach out to those customers. So we expect that will start to grow in H2. Churn overall, churn overall is around 25 to 30%, but it does vary on first year renewals. So there's a new registration, you have then the first year renewal, and then you have a year 2+ renewal. So on a first year renewal, the renewal rate would be somewhere around 60 to 65% when you remove a couple of top level domains where we have high volume, low cost promotions that we run, which are mostly on the generic top level domains. That said, the portfolio, both the generics and the verticals, have a renewal rate of above 75%, beginning in the second year of renewal. So renewals on renewals. So we see that fairly consistent.
Yeah. So just really to make that point. So on a lot of our working and data analysis is understanding how to best work the first year promotion to drive volume, to ensure that we get a sensible renewal rate, which we know and plan out that will be lower than the number that Michael suggests when there is no promotion being done, but making sure that second year renewal absolutely comes up into the range that Michael indicated, and that's a key part of being able to drive registration growth, and we've worked that very well to date. So just one final question is from Mark R. Does the company require to progress any capital reduction measures in order to ensure it has sufficient distributable reserves to fund future dividend payments? As a business, being at the heart of the turnaround is getting this business into profit and have profitable growth. So that is core to our thinking, to be generating cash. And so we are constantly looking at how best to manage our resources. And that is as current today as it was. So yes, we do look at how to be more efficient and get greater efficiencies into our system, both through our supplier network and also internally. And that certainly has been continues to be front of mind for the group.
Thank you, Toby. Obviously, I'm equally mindful of your time, and obviously, just to remind investors that any questions that you may have submitted today, the company will review, and where it's appropriate, we'll publish all responses, and you'll be notified as soon as they are available. Toby, perhaps I guess before we wrap up, and I know you want to have investor feedback, so we will direct investors to provide that feedback. Perhaps I could ask you to wrap up, and then I'll take back.
Well, thank you to everyone who's joined. I understand, or was indicated, that there are over 40 had asked to join this, which is exceptional and really is proof about the power of the online environment. I think the AGM format that was originally conceived has perhaps increasingly out of touch, particularly for a business such as ourselves that operates in different time zones at a lean team. So we think, thank you, Mark, for the innovation. Thank you for our chairman for joining from Singapore, and Michael, who's in Seattle. And thank you most of all to people who've taken time out of their day to join this and pose questions both before and after. I think we answered around half of the questions, so we will, as Mark indicated, where appropriate, answer the remainder. So thank you everyone for their time.
Thank you. Thank you, Michael. Thank you to Guy, and thank you, Toby, for updating investors and to actually offering the AGM despite the obvious restrictions from COVID. Could I ask investors not to close the session, as you'll now be automatically directed for the opportunity to provide feedback. If you access this meeting from our website, the feedback page will appear in front of you. If you accessed it from the link sent you by email, you'll be asked to log in to submit the feedback. That takes a few seconds, but I think as Toby and the team have suggested, it is important that they receive your feedback. So thank you. And on behalf of Toby, Michael and Guy, I'd like to thank you for attending today's presentation. And that now concludes today's session. Good afternoon.